Hello everybody, this is Andrew Kita, City Administrator for the City of Comanche, and I'm going to give a presentation today about our taxes that just came out. I think everybody got their tax bills, and a lot of people are wondering what the heck happened here. And this is the second time I'm recording this video because the first time my video was full of uhs and ums. So I'm going to try to limit those today, and we'll see how far we get without me going or So this is a presentation on the City of Comanche property tax levy for 2021 and 2022. So for those of you who don't know, our fiscal year runs from July 1st to June 30th. So we are currently in fiscal year 2022. So if you hear me talk about 2022, it's because that's the fiscal year that we're in. So everybody got their property tax bill and went like this guy. Okay, so I'm going to try and help you through that a little bit and see if we can't help you understand what the city's portion is, because that's important to us as an operation to make sure that the citizens know what the city did to change their property taxes and what you end up having to pay. So a couple of key points to make is that, there's my first I let it go. Okay, so property valuation since 2015. You can see here the property values, and the values and valuations are the same thing. It's a combination of all property values, whether it's just an increase in value itself for existing properties or the addition of new properties. So when we talk about valuations, it's a combined everything all together, even commercial, industrial, and all of that, and housing as well. So you can see the property valuations have been going up at a very nice pace for the city, but you can see too as well between 2021 and fiscal year 2022 a rather significant step up. So that's going to bring in a lot more revenue when we're taxing on a percentage of the property value. And that's how this all works. When we talk about tax levy and tax rates, it really is a percentage of your property value. We say it's $12 for every $1,000 of assessed value. Okay, so that's 12% of $1,000. So for every $1,000 your house is worth, $12 and some change comes to the city, and other taxing bodies have their rates as well too. So property tax percentages, if you look at the back of your tax bill, you received your tax statement, and the sticker shock is on the front. If you turn it over at the very top, there's a long section that gives some explanations up there. I've trimmed it down for the stuff that's important for this discussion. So you see the breakdown here of all the taxing bodies or taxing assessments that are done or debts or whatever. They're all broken down here for you to see. So the first one on the list is the Comanche Community School District. The second one is Comanche Corp. That would be the City of Comanche. The third one is the county, and they have a number of items that they include into that. Mental health is included in there and things of that nature. You have the Eastern Area Iowa Community Colleges. You have a debt service for the jail. There's the assessor's office that needs to be paid for. There's a recent county debt service for communication radios. That was just done last year. There's a debt service for facilities. The Ag Extension Fund, that was the community college, a thing that got voted on in one of the previous referendums that passed, and that wasn't a new tax, that was just replacing an old one that was falling off. So I want to draw your attention to this percentage right here. What this is telling you is 33.08% of your total tax bill goes to the City of Comanche. You'll see this number here, 41.41% of your total tax bill goes to the school district, and 18.80 of your tax bill goes to the county, and so on and so on. It adds up down there on the left-hand column. For this particular property, this is assessed at, this property is assessed at, I believe, $102,000 of value. So you see, last year, this person paid $650.48 of their property taxes to the city. You'll notice that this year they're paying $651.72. So that's an overall increase of $1.24, that's the right math, more than they paid last year to the city. You'll see the totals from last year to this year for the school district are higher, and the increase to the county is higher, but the city really stayed the same. And the increase to the Comanche Community School District was on a referendum vote that was voted in by the citizens. That's to pay for their property improvements. So the city did not raise its tax levy. In fact, the city lowered its tax levy because we were aware that property values would be going up. So there was an effort made to try and offset that, so you're not paying any more dollars to the city than you did last year. And it didn't work out that way in every case. Some people had surprise assessments and their property values went up for certain things, like turning your basement into living space that may not have been recorded. So that makes your property more valuable that way. So there's lots of things that can change that along the way. So to break this down in a chart form, this shows you where the chunks of your property taxes go. The orange on the right is the school district. The gray area over here is the city. This red part is the county, and here's the community college, and these other slivers become these other debts for radio, jail, and ag extension, the assessor's offices in there. So a number of other areas, but primarily school district, city, county. As far as the city's concerned, the tax levies or tax rates, if you want to call them that, since 2015 look like this. You could see 2015 and 2016, 17, 18, 19, they were all below $12. It was a concerted effort to keep it at $11.999979. I think we got 1 year to keep it, just keep it under $12. That was the instruction. And then what happened? Well, we had an increase because we had to take on the community center debt. When I arrived in 2016, in the fall of 2016, the community center was already in progress and it was already over budget. And things happened, so it was paid for in cash. The cash funds became low, so we had to borrow money to keep our cash liquidity viable. In nerd speak, we need to have enough cash to be able to make payroll. So we did a reverse referendum on that, borrowed the money to pay the debt, or to create a debt so we could replenish the general funds where the money came from to pay for the community center. So that worked out. It did increase the levy 15 cents. We went from $12 to $12.15. And now you see this large increase for the following year. That was from flood losses. We incurred a lot of cost from the flood damages that we received. We received a lot of that money back from FEMA, but we still had a significant amount of cost compared to what money we had on hand. So it may seem like we received a lot of money from FEMA, and that's true, but we had $100,000 of expenses go out that were not reimbursed by FEMA, and that money had to come from somewhere, and it had to be recovered. So we were able to recover a significant amount of that, and things worked out better. We did receive money back from FEMA, and we were able to maintain our general fund at a fair level. And if you saw my other nerdy presentation on liquid funds and our cash, you would have seen that too, that when you talk about general fund cash on hand, it was low, went up, and up and then down, down, and then shot back up again once we received money from FEMA, but continued also to bring in more revenue in taxes and other places as well, not just taxes. There were other places where we increased revenue. So now you see this upcoming year where the tax levy dropped to $12.25. That was decreased because we were aware in December that the property valuations would be coming in a lot higher. And it was a little shocking to see how much money that was going to be bringing in if we had left the tax levy. If council decided to leave the tax levy at $12.55, your tax bill would have been very high. And there was no need for the city to be keeping the tax levy that high and bringing in that much money. So it was an easy, quick step on a short notice to be able to lower the levy. And further into the presentation, you'll see what the expectations are coming up. But you can see from this presentation that the city did make a concerted effort to lower the levy, and we expect it to lower again. So again, going back to this chart here, it shows you that decreasing the tax levy when your property values went up kept you paying basically the same amount to the city. Now, that could have changed if your property value went up tremendously. Say you added 2 bedrooms and a bathroom to your basement that weren't on your previous assessment. Well, that could be adding $40,000 of value to your house. So then that wouldn't compare to last year because that wasn't on your assessment for last year. So those things could change. But if you just left your house normal and hadn't made any changes to it from the year before, the chances are you didn't see much of an increase in the city's portion of your tax levy and your city portion of the tax dollars you sent to the city. So the question is, my taxes went up. Did your taxes go up? Well, the question is then, what drives property taxes going up? Well, the number one reason your property taxes go up is because the property value increased, which is not normally a bad thing. We certainly don't want them decreasing in value. It's important to keep or maintain property values, but property values will naturally go up on their own for certain reasons. One could be home improvements. If you've done home improvements to your property, or your neighbor has done home improvements to their property and driven their property value up, that will affect the value of your house, because the value of your house is typically driven by what the market is willing to pay for a house in your condition in your neighborhood. Those things are all market driven. It's the fundamentals of economics. Higher demand is driving prices up, and we know this to be true. If you go on realtor.com and search for houses available in Comanche, I think you'll find 7, which means we're in a very high demand market. When demand is up and supply stays the same, the price goes up. So this also leads to the point that we need to look at expanding and building homes. And it's very difficult to do that when we're landlocked the way we are, and the land that is available isn't really available, or the cost of building houses gets too high, and developers can't afford to build houses because the price of a new home gets beyond what the market can really bear, and at some point that levels out. We all saw too recently the tremendous increase in materials prices. At City Hall, we were fortunate to get ahead of that a little bit, so that didn't affect the cost of our project so much, but it did affect the cost of some of the new homes that were built, and a lot of builders stopped building because they're just waiting for the price to come back down, and we're starting to see some of that happen too. One of the other interesting things you'll see in Comanche, if you've been around, yes, we had some subdivisions go up, but you also saw some of these, what we call in the term dead lots. And these are lots that are in older subdivisions, much older subdivisions that have never sold. They've always had like for sale by owner signs in front of them, and they've sat there for decades. Here in Comanche, we've seen quite a few of those sell here recently, and new homes be built in these 30 or 40-year-old subdivisions. So that's a key indication that there's high demand for people to live here, and people are willing to spend the money to build new homes in older neighborhoods. So that certainly is going on. The other way taxes go up is when taxing bodies increase what's their tax rate or tax levy. The city itself did not increase its tax levy. The city of Comanche lowered its tax levy. The school district is another participant in that. They can increase or decrease their tax levy. They increased their tax levy based off of the referendum vote that happened for their property improvements. The county did raise its levy as well, and they added that debt service for the communications equipment, and it was necessary. I think the derecho situation exposed the issues with the communications equipment that we had, and this upgrade was absolutely necessary. And the community college can impact your taxes. They're at such a small portion of it, though, that they really don't impact your overall end dollar too much. So when we talk about city operations and property taxes, what does that really mean, and where do your taxes go, and how are we paying for things, and these new services, how does that affect our taxes? And I've spoken with some people in the community about their tax bill and some of the things being said about city operations and taxes, so I want to try and alleviate some folks with their concerns about the city operations and city taxes. So number one, adding fire and paramedic staff did not cause your taxes to go up. So those 2 new staff members are paid for with increased ambulance revenue, as well as what's called GEMT funding. So if you go back to my previous presentation about revenues and the fund liquidity of the cash, you'll see the point where we talk about ambulance revenues going up because the ambulance department decided they actually start billing Blue Cross Blue Shield for what they're willing to pay for an ambulance run. The city was only charging half of what Blue Cross Blue Shield was willing to pay. And the GEMT funding is coming from the federal government to offset the cost of Medicare and Medicaid runs, and that's a large chunk of what our service provides. So that has really helped increase the funding to the city to help pay for those 2 new staff. So the 2 new staff members at the fire department did not cause property taxes to go up. The City Hall project did not cause taxes to go up. That's another one that's floating around there in the world of the interwebs. It didn't happen. So how are we paying for the City Hall project? Well, it's a debt that we took on to the water, sewer, and solid waste funds. Those are the primary functions of City Hall as an operation as far as a business office. Makes up 75% of the work that we do here is for those utilities. So it's appropriate that those utilities pay for the expansion and a proper space for the utilities to operate. The water and sewer funds remained flat. Those rates haven't changed. We did a minor adjustment to one. We raised one and lowered the other, and we might do that again with the bases, but your bill should not be changing. If your water and sewer bill is changing, it's from usage. The rates haven't been affected by anything in the last few years. And the solid waste rate did go up a little bit. We anticipated that happening, though, as we have a new carrier and there's an increase every year, so we pass that along. Solid waste isn't something that we generally pull a profit off of to pay debts that way, but in this case, for each one of these utilities, water, sewer, and solid waste, they're each paying $15,000 a year towards the debt for City Hall. That's a 15-year debt at 1.55% interest from our friends at First Central State Bank. Pretty good rate and below the rate of inflation, especially with the way inflation is running now. So we're able to get that rate and get this project up without increasing taxes, without increasing the water, sewer, and garbage rates, and essentially paying for it with money that's an interest rate lower than the rate of inflation. That's always a good way to operate. So we've done a lot of street projects here recently. Street projects did not cause the taxes to go up. There's been a lot of street work done, and there's more coming. We're getting ready to do phase 3 of our street improvement plan. Streets are paid for with road use tax funds. We call it RUTF. So that money comes from the state, and it comes from every citizen in the state of Iowa, or every person passing through Iowa who buys gasoline at the pump. There's a gas tax that goes on the gas. That money is sent to the state of Iowa, and it is redistributed back to cities and counties and wherever, townships. They all receive certain amounts of road use tax funds in return based on population and linear mileage of street that they're required to maintain. So that's not property taxes. That's taxes paid by you, me, and everybody else passing through the state of Iowa who buys gasoline. So this is why it's important for people to fill out the census. The more people we have, the more funding we receive in road use tax funds. Same with the school district. They receive more money from the state when we have more children enrolled in our schools and everybody's accounted for. So street projects did not cause your taxes to go up. The roundabout did not cause your taxes to go up. The roundabout is a program that will be a project that will be funded mostly with state grants. So the Iowa DOT awarded us the TSIP grant, which is Traffic Safety Improvement Program. That was $500,000 of the $850,000 projected cost of the project. We received $100,000 from the Regional Planning Authority. We received what will be about $135,000 again from the DOT for traffic safety. And the remaining $100,000 or so will come from the city's portion of road use tax funds. So again, that comes from the gasoline funds. Does not come from general fund property taxes. So the roundabout did not cause your property taxes to go up. The city portions of your taxes remained steady. Unless, again, you did some major improvement to your property, then that's definitely going to change your property value. So what happened this year? Well, the school district did increase their rates, and that was a referendum voted on by the voters. So they had their project, put it forward, let the voters vote. The voters agreed to raise their property taxes in order to pay for this project. And that's the end result. What you're seeing now is the result of that vote. The county did have an increase as well, and they added the communications equipment and radio debt. So, and that was necessary as well, in my opinion. The city decreased its tax rate. So again, we offset and decreased our tax rate to bring similar amounts of money in as we anticipated last year. Continued operations, because the additional operational costs were covered by other funds. So the addition of the 2 firefighters was covered by ambulance revenues. So the city decreased the tax levy. On the example I gave you, that for that $100,000 house, those taxes on the city's part increased by 0.2%, one fifth of 1%. And we certainly could have tried to figure a couple pennies more, but that math could go on forever. The city is aware and will continue to work to control the tax rate. This is an overall opinion of council. I'm sure in my conversations with them, and if you ask any of the council members, they will agree. We should continue to work to maintain the tax rate, and we find alternate sources of revenue. There's other areas out there, especially when you get down to the ambulance bills and the GEMT money. Those are all alternate sources of revenue where we should be getting money in for services provided. When we have permits for oversized trucks that come through town, those kinds of fees come in to help offset costs. So we try and find those alternate sources of revenue to help keep the tax levy where it's at. So what are the expectations? Well, you can expect your property values to continue to rise, which is a double-edged sword. You certainly don't want your property values to decrease, but having them increase does bring that necessary evil of, well, your taxes are going to go up. Your percentages may not go up, but if your property value went up and your percentage stayed the same, you're going to pay more in taxes. The city will continue to analyze those and project value changes. We're aware that next year that the values will increase, and in December we should get those figures, and I'll make recommendations to council on where we think the levy should be in order to maintain what we're doing. And it'll be up to council to say, raise it a little more, lower it a little bit more. My suspicion is that the tax levy is going to go down. Even if we bring forward other projects, and we're talking about that here soon, bringing forward other projects to add debt because money is cheap to borrow right now. Even if we bring those projects on, I think the tax levy is going to go down even more. The goals include get the general fund cash to an acceptable end of year level. So if you watch my other nerdy presentation on debt, and the other one again on cash liquidity, you'll see that in 2016, before I arrived, the general fund cash had $85,000 in it. This past year, June 30th, we ended with about $290,000, and it would have been $380,000, but the city spent $90,000 buying some land that was necessary for future development. So very healthy from that standpoint. The goal really is to be at $800,000 in the general fund cash at the end of the fiscal year, so that were something to go sideways and there was money necessary to make payroll and make sure the city continues to function, that money is available. And that's a good goal to have, to be able to have that cash available, and then establish policies so people don't decide, hey, let's go spend that on something that isn't necessary. And then also getting folks to understand how city debt works and what our debt situation is. If you've watched the debt video, hopefully you've grabbed onto that idea that our debt situation is really good and we have an opportunity to do a lot of great things. And this is really the moment where, if you understand what's going on with your property values and the revenues coming into the city because of the tax rate, and position that with our debt capacity and the high quality debt situation that we're in, that it may be an opportunity to take some of these plans that we have for projects, pull them forward, and do those projects with cheap money to borrow, and we won't have to raise the tax levy to do it. And I think that's a great situation that the city's in right now, poised for great things to happen. So that's the end of the presentation. I hope I didn't put you to sleep. If I did, you can play this over and over again every night, and off to slumberland you'll go. So if you have any questions, please do feel free to reach out. I'm happy to answer any questions. Again, if you've listened to these, I've bored you to death because I'm a nerd about this stuff, and I enjoy explaining it to people, helping them understand how their taxes work and how the city functions and how all those things play together. If you have any questions, please feel free to call City Hall. That number is 563-259-8342, or you can go to the city's website and send us a message, email me, or whatnot. The city's website is comancheia.org. And hope you all have a great Comanche Day. And if anybody kept a tally on how many times I said if it's over 25 and you let me know, I will have a special treat for you. Thank you all very much, and have a great Comanche Day.